What's up, everyone? How you guys doing today? Hope all you doing as well. But no worries though. You're checking in with your guy, Mr. Rafi. So welcome to the Sooner Pro Gaming channel. You know where we strive to teach and feed you financial wealth, and education. And, just a little to entertain, just to get you through the day if needed. So we all know that information is power, and it doesn't matter where you get it, as long as you get it, and most important, you get the right information. So today we're going to discuss how to make money in stocks. Stock trading is just like the NBA, NFL, boxing, in a cluster, sports and just different other competitive things. So in the way that we can compare it is that you see we all play to win. You see, we got to win, and we win on a consistent basis, or we lose, or we try to keep winning, but we're playing towards a bigger goal. You see, in the NBA, they play to make it to the finals. The NFL, they play to make it to the Super Bowl. In boxing, you hold the belt as a champ. You like to say, we are the champions, my friend. Oh yeah. So with the stocks, you win when you make any kind of profit. When you take profits, when you go to your brokerage account, you sell a stock for a profit. That's a win. Simple as that. It's just that simple. But there are levels to your winning, to the amounts you win. So, and you need your levels to be stable to make a nice amount of profits. So in stocks, the more money you have, and the more money that you're earning, that you're able to invest in the stock market, the more money that you can potentially earn over time. And the things that we're gonna go over today is just some brief things that we need to uh, conquer within ourselves before we can start looking at any outward things. So all this stuff, mainly that we're gonna talk about today is how to make, you know, profits in the stock market, how to make money with stocks, but we're gonna focus on looking within. So the first thing we need is a positive mind frame, so that has to do with our mind, our mentality, the way we thinking. We need to have discipline within ourselves. We need to have responsibility. So you need to study responsibility on, making sure, as you can see the screen, that you understand what's going on this screen. This is just like the regular, you know, this is Yahoo Finance, and then this is just the regular internet tab, over here. And what you see stocks over here on this part right here. You got stocks. Then over here on the Yahoo, you got stock news. So it is relevant, and it is something that you need to take a notice to. So, like I said, so you need to have a positive mind frame, you need to have discipline, and you need to be responsible, to take your profits. And that's another thing. You got to take profits when you see profits, or you got to wait patiently, you know, to not sell when your profits, when you got profit. So let's say, for instance, you bought into a play and it's up 5, 6%, 10%. You can sell prematurely, or you can sell. You have to understand. You have to kind of know where the levels at within your, the stock that you got. So that's why you always want to go in, somewhere where you can look at the charts and you can see the levels that have been up and down, up and down. But we'll get back to that in a minute. So just keep that in mind as well. So you need to be patient if you sell and take profits to when you're gonna re-enter. Sometimes you take profits and you think the stock gonna keep going up, and then you wanna buy back in around the same price, and then it just plummets all the way back down, and then you just basically put money back into play, and now you down when you could have just waited, got the profits, waited, and then wait for a re-entry, or just keep the money there. You don't always have to put the money back in once you make profits. You can make profits and then say, well, I'm just gonna only invest my profits. I'm gonna just keep the main part that I invested. I'm just gonna keep that in the portfolio. I play with the profits and just try to build up like that as well. So it's many different ways that you can strategize things throughout the day, throughout the month, throughout the week. And the main reason why I say you have to really understand not to sell prematurely, because stocks have a tendency to keep going up. They don't go up in a straight line. They go up, then they level off. They come down, they go up. Let's kind of briefly look at this pattern one more time. Like it's coming down, and this is trading view once again. This is like the 18. So this is day trading. So by the day, so during the day it's going up and down. And that's just Nike, and we'll look more into that. But more back into how you can make money with stocks. You need to learn a strategy. You have to have a plan on why to buy, when to buy, and how many shares you plan on to buy at a time. Well, let's say how much of a percent of your net worth or of your stock portfolio value or of your cash value you willing to cash up in a play, or how much are you willing to invest in a company, and how many shares are you willing to buy. That's kind of the same thing. We just cashing up, investing, plays, companies. It's a lingo. But remember, a share is a piece of a percentage of a legitimate company. And you see Disney, Tesla, like you see American Airlines, like you see these headlines on the internet. These are all stock companies that you can buy. You can be a part of this company, part of this economic, business and wealth building flow. You want to invest in companies and accumulate shares over time. Mainly when stocks go down in value, you want to collect, and you want to collect some stocks that pay you a dividend. So that's like a company, paying you out your portion of however many shares you got, however much percentage you got in the company. That's how much your dividend is gonna be. So if you've been saving them, you've been buying, you've been accumulating, you got a nice amount of shares, then your dividend payout is gonna be high. So that's something to think about as well. But in the stock market, there are many characters to stock investors. That's how I put it. You got your traders, you got your swing traders, you got your bears, you got your bulls, you got people that just say they just all in. You know what I'm saying? It's all about getting the money. It's a lot of characters with it. But to keep in mind, there's no rush. Don't hassle yourself. Don't be anxious for nothing in the world. Start slow and learn a lot. Take it all in. All the information, get all the knowledge, all the stuff you can read, just read it. And just watch your portfolio. You can buy one share. We're going to go over here while we at it. Okay, and I'm going to put these plays up. So, and all these is not financial advice. I'm not, advising none of this stuff. So, make sure you do your own due diligence. Make sure you do your own research. Make sure you always keep your experts and your good counselors on your side, so y'all can, so they can help you out, so they, you can vent to them, and, you can get their insight. As well as make sure you subscribe to our channel if you ain't already subscribed to. Hit that like button, click the bell so you'll be notified, and just, you can always reach out to us. We got a different type of communication platforms that we got in the making, so we can interact more with our viewers and our partners and just different things like that. So don't hesitate to seek out information from people that understand stocks, cryptos, all this investing, and who understand the economy as well on a financial scale and just a broad base on that level. You want to invest in companies that that's gonna always continue to keep making profits over and over. You know, they might not. Some years it might be different things, but they might make not as much profit, but they always gonna be making a profit. Consumers always gonna need what they have, and you know, things is of value. So what I'm gonna basically what I'm teaching you is this: if you can master this, and you're not already a millionaire in the stock market, or you can make $1 million in the stock market if you master it. See, and this is an overtime game, so that's why I always say, if you young, make sure you be serious. A lot of young folks, you know, and this is from experience, that they don't be serious enough at the times when they need to be. You know, a lot of our youth and our, you know, younger ones coming up under us, you know, they understand how serious it is to get your foundation built early. You know, start thinking about jobs when, you know, like how to start getting 401ks, pensions, and all that stuff. How to get that type of money with your jobs. You know what I'm saying? Where you can already start investing and having them platforms set up. It can just, if you're gonna be a loyal worker, or you just gonna be bouncing around. But the focus is on looking for jobs that have those type of benefits. You know, and it's all, like I said, all this stuff is a strategic thing. They got company, and a lot of stuff is shares and corporations and stocks more than you think. So that's why you should understand and know this stuff. So that's why I say we put all this work in, we do all this research to help you and make sure you have the information to succeed in the stock market. Like I say, if you can master these, you can become a millionaire. And if you're already a millionaire, you can become a billionaire. Like in these times in the stock market, you know, the stocks right now has been in a downtrend. It's been in a bear market. A bear market is when companies and indexes is down 20% or more for a certain amount of time. So if you really want to just kind of know more about it, then you should, like, I'm just giving you pointers and stuff so you can do further research on your own time, so you can read it. Maybe you can write it down. You can implant it in your mind, so when you know you keep doing this stuff over time, you'll be able to grasp it, and you know what I'm saying, be a big help to the next person as well, or you know, become more financial wealthy. So with that being said, don't put all your money or investment, you know what I'm saying, don't put all your money in an investment at one time, because it seems like, and I know a lot of stock trade, like it seems like when you buy, as soon as you buy, the stock price go down. You know, so if you plan on buying 25 shares right off the back, and you know it just ain't been a bull market, and you don't really, you uncertain about what's the next move, just kind of buy 5 or 2. You know what I'm saying? And you know, only buy it. So you can automatically set your prices on prices where you can buy if you're doing other things and all that. So it's a lot of tools and a lot of stuff that can help you succeed at this stuff if you managing time, managing families, and just a lot of stuff like that. Businesses, other businesses, physical businesses. But in all businesses, you need to have this portfolio business going for you. And if you like doing other stuff, or you got other stuff, this portfolio business is where you can put that money to, and it'll help you save it. And it's something, you know, that you have to gauge over time. You know, when to buy. It's different seasons in the stock market. And when I mean seasons, let me explain. Like seasons, for example, bear markets, bull markets, recession fears, financial meltdowns. QE is quantitative easing, when Feds pumping money into the system. Stocks are ballooning and going to the moon. When prices are going up tenfold, when prices are going down thousands of percent every other day. You might get a pop, but it's steady tanking. You see what I'm saying? Like them is certain seasons that you could call this in the stock market, and you should know when them seasons is, and you should really know all this information. At least you should just know a small portion of this information to be able to, make a little bit of profit in the stock market. So basically, if you look at this like this is a side business, it could be a side business as income. You can make 5,000, 10,000, 20,000 on top of what you're making from your work, your 9 to 5 salary. It can help you do a lot of things. Yeah, so look at this right here. We got BBBY, Bed Bath and Beyond, which is, I'm pretty sure everybody know about this company. It's been up and down. Man, it's been doing, a lot. So, just research. So, do everybody think that this company is just going to go out of business? I mean, it may be. You think is it a good time? The dollar cost averaging, it's only $4 or $5, so that's like $500. You get you 100 shares, couple hundred shares, 1,000 shares, and just hold them for the long time. See what they do. So that's like if you willing to put 1,500 in the company, just starting out 2,000, 2,500, 3,500. Like right now, you could put 100 here, 500 there. When it went, what I'm saying, on days when the market fluctuates and it go down, like the lowest is at 52-week low, $4.38. You never know, man. I'm not saying it could go to $2 or it could go back to $8, $30 when it was rocketing, but you never know. So and that's why it's all, it's risk, that you have to factor in, and most of all when you when you in this stock market game, you need to learn how to use and maneuver around in your brokerage account. So the account that you in, that you got, if it's Vanguard, Fidelity, TD Ameritrade, you need to know how to maneuver around. You need to know all about it. You need to know all about the terms, the policy. You need to know about all that stuff within it. So that's basically like your business that's holding your stock, or your partners that's holding it. So you need to know about, how they work and what's going on. And you know what I'm saying? So once you learn the ins and outs of the platforms, you got all that stuff down. Trading can become a little bit smoother. Trading becomes smoother as you progress, you mature, and you build confidence, and you make sure you lock in profits, and you start building confidence because you're making money and your bag growing. So that's how you gonna gauge and forecast that. So you, like I said, you must be reading. Like all this news is here for you. It ain't nothing but just like all this. You can click on to read all these recent news about it. Some news is good news, and you got to understand that some people want the stock to go down. So some news, and that's why you got to be good at discerning things and just looking over at the charts. You can look back, see how this is helpful information. You can look back 5 years. See this go back 5 years. October 20th, 2017. The stock was $21.47. You know what I mean? So, and then it reached a high of $35.33 in January 29th, 2021. And it's $4 or $5. So, I mean, getting $10, $14 is wouldn't be out of the ordinary, and it wouldn't be out of the ordinary if it dropped lower. So, make sure you do your due diligence. Then we got another play on the list, and I'm just recommending, not really recommending, but just bringing some, like I said, some nice companies to the platform to show. These are some of the companies that I have interest in, and I think, that may have a potential to, bring profits to its investors. It's just kind of energy play. And then, like, see, this trading view is a tool, so look over here. And this is kind of to see where your entries is going to be, where your sell points is going to be. Some of it look a little bit different than other ones, but September 12th, 2022, it was around $8, so it's down a couple dollars. So if you thinking long term that these plays gonna go back to their normal, that's $2 game. Like I said, if you got a couple hundred shares, couple thousand shares, and that's easily profits that you can, just as soon as they hit that mark, you can just lock them in, boom, 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 and just add that to the bag, and just keep moving, check some plays. You know what I'm saying? You ain't gotta be rushing to put it back in, and just build that bag up. That's when you got the belt of the stock market. When we call them home runs. When you hitting 100%. So if you buy this company, any of these little small companies that I just small in price right now, and they go to 10 or 12, them home runs. You could be like, man, I'm just gonna get like 5, and then in home run, yeah. But you made some nice profits, 100%. But the game really wasn't nothing. Let's see. So $6.65 times 10. So that's $66.05. These stocks been kind of going, and remember, we're in a downtrend, so you don't want to rush your entries. And you can look, so $66 to get 10 shares. So if you got 600, you can bust that down, or however, whatever you willing to lose or willing to spare. That's how you can do it. But if you're in the thousands, you can easily bust down 100 shares, 600, 700. And hold if it goes to 400, 500, because you ain't really tripping, because you got other money that you can use and allocate to other plays. And see, if you accumulate enough of these plays, they got plays that's down $1.20, that's been $5, $6 plays. So if you can accumulate them and still accumulate plays like this, Ford, these plays that they got, and I just think because over time they may do good, with certain things. So if you car person, and this just is putting it in where you owning companies, you trying to get in the business of cars. Okay, Ford, you can get in it right now. So if you look at the max years on Ford, and this is simply on Microsoft Bing, where you just type it in, boom, and you got your information. This is how easy, accessible it is to learn and understand. See, Amazon is another one that's, that could be a banger on the list, hit on the list. Tesla, so it's just a lot of stuff. So this was $2 back in 1982, and it went all the way up to $36.66, 1998. So you would have had to held on. It ain't never went to $2 no more. Never. It been to like what, 6, and that's right around the pandemic. I remember we bought it at $4 and sold it, and it ended up going to about 20 something dollars. Yeah, it did. It peaked at like 20 something. After it was around like right there, 480, around 483. I remember that. So that's why I say selling too soon. I think I sold like, man, I think I made like 300-400 on it, but I didn't held it long enough, and that was like from in 2020. springtime to wintertime 2021. So that's when it peaked. So that's what you gotta look. That's you know what type of game this is. And we got another one. If you in the hotels, we got Wynn Resorts. Ticker symbol WYNN. Its 52-week low was around $50.20. You know what I'm saying? Highest was around $100. So, these is levels right here. That's why I call levels. We trying to get, like my buddy Chris Sane say, and you can check him out. Chris Sane, a lot of mentor speakers, and when I first got in the game, I was watching him. He had the 100K challenge. So at that time, I'm fresh in the market, so we put drive on it. So we trying to play the game like a sports player. Like I said, NBA style, NFL style, boxing style, soccer style, whatever the type of sports that you like. And this stock right here, BBB down is down 76%, 77% in the past 5 years. Yeah, so that's something to think about. So like I said, you got the hotels. Let's check this one out. In 2002, this was $12. It was like 20 years. But if you look at the charts, it peaked $157 in 2007 from 2002, 5-year stretch. Yeah. Dropped all the way down to $20. So it's looking like, okay, if you're looking at it's $12.52. Boom, it did a run. It peaked. Like, these are the times you need to know when it peaks if you're going to hold. Or buy enough shares where you can just keep selling as it go up, portions and portions. And if you good, when it drop a little bit, you can get back, try to get back in. But that's a lot of, timing, trying to time. And then it dropped from 157 all the way to, it may have been a crisis or something happened, to $20. So if you'd have held on, you probably would have been kicking yourself for not taking profit so you can buy back double or triple or however many, when they hit that bottom. Even though you're going to be getting dividends, they say hold, but yeah, at least you need 2 portfolios. And these, like I said, these plays has been going up in there. So $20, then it went to $150 2 years later. So that's like $130 profit per share. Then it dropped back down to 91. See, it didn't go nowhere near none of them levels. Like, boom, it's only gonna go to 91. So voila, jumped all the way up to 241 hotels. So you never know. You gotta kind of read back the season. You can go back and it'd be data to show you what was going on in them times. You know what I mean? So that's why all this stuff, it really matters just to sit back and, read it. Tell your little ones to read it to you. Go over here, financials. Wayne Resorts reported revenue of $3.8 billion for financial year 2021, an increase of 79.58% compared to financial year 2020. So remember, we are in some type of, I don't know, they say downtrend, bear market, something going on, transition, and it's something. But if they've been doing this and it said net income grew 63.4% minus 75.8 million or something else you gotta look into. So you gotta just do your due diligence. But it may hit 100 again, and that'll be a home run. Or you can get 20-30% out of it whenever the market go back bullish. That's what we hope for in the stock market. See, all this stuff we just can talk, chat amongst each other, and like I said, if you don't have the time in it, you ain't really gotta hope. You just gotta basically be patient for that time to hit them buttons to sell, and then hit them buttons to accumulate when they go down, like we was just seeing on this chart. So that's all basically it is. You just gotta take your investing serious. Don't get distracted by other outside things, you know what I'm saying, that's not important. Then if, besides family, personal life, self, spiritual time, all that stuff, but we talk about this other stuff, habits, desires that will not be able to help your next generation out of 100 years, then nothing really is important in stocks and crypto investing. So you need to lock in and tune in and make sure you subscribe to the Sooner Pro Gaming channel, Rafe Pro. Look up Rafe Pro. You live with your boy Rafe, where we're money managers, masters, and we want you to succeed and be a financial success in your life. So, you know what I'm saying? Make sure you watch all our financial videos. We got gaming videos that's financial basis, so if you're into that type of entertainment, you know what I'm saying? If you got time, make sure you watch a few videos. We got different varieties of content. Hope you find something helpful. You know what I'm saying? Like if you do. Make sure you subscribe. Make sure you click the bell and stay notified to keep updated with our content. And, before we just drop out, we're going to look at a couple other ones. You know what I'm saying? These are just stocks that I'm putting on the radar, like Nike. These are shoes. It used to be 28 cents. Remember I show you that other stock? Not saying that that's going to do that, but when the companies starting out, that's how they grow. So that's why you want to say, remember when we say, when is the best time to sell a stock? Never. Hold for a lifetime. But once you become savvy, like I just showed you, you are able to buy and sell within these times of these peaks. So that's why you need to be learning them strategies and them plays. Like this stock is up. Nike is up 23,550.64% all time. So like even right now it's just dropped from $166. It's still up that over a lifetime. So that's like we learning from the great Buffett and all them. That's why I be watching. He say, what we doing? Good businesses. You know what I'm saying? That's what we investing in, good businesses. So make sure you keep your thinking cap on. Invest in good businesses over a lifetime. And make sure you know how to take profits, patiently to re-enter, and keep doing it over and over again. So that's it for this one, folks. Make sure you stick around, and we'll catch you guys in the next video. Later.